We're live. We are live. You know, on Friday I'm looking at my my weekly scans to see what the weekly chart is giving me. To reiterate, you can look at the market in any time frame. This is a 1 week chart. This is a daily chart. Every bar on this chart represents 1 week of trading. Every bar on this chart represents 1 day of trading. The green bar simply means that there were more buyers than sellers for the week or for the day. The red bars indicate that there were more sellers than buyers for the day. And the yellow and blue bars indicate, well, the yellow indicates a sell signal and the blue indicates a buy signal. On this side here is the prices of the stock. Right now Goldman Sachs is at 348.22. So I just want to reiterate that, just to give you a simple explanation of what you're looking at in this chart. Now I went through my stocks and I'm looking at my scans now, and I don't see any trades, and I'm willing to take today going into next week. I got a signal on DraftKings, but I think it's going to hit a new low before it goes up. So I'll be looking to buy calls next week on DraftKings. Let's look at the price of the options, what it would cost me. I think they report on the 7th. So we're going into earnings with DraftKings. So that is on next Friday. So DraftKings reports next Friday. So while that being the case, you know, the options are going to be elevated. They're going to be more expensive to buy. Let's look to see what the prices are. Not that one. This one. Let's look what it would cost me. We'll go into next week. May 7th is the next expiration, because I trade weeklies. If I was to get in this contract today, I would have 7 days remaining on this contract for my bet to pan out. So DraftKings right now is currently at 56.60. Remember, these checks indicate around the prices that I'm willing to pay, what I'm really willing to bet for an expected move. So it's not too expensive. Let's see what the implied volatility is for that stock. Before I go on, JPM was a loser, which I had already anticipated it. And let's see, going into next week, I mean, it's 78%, so the implied volatility is high, but the options are not really that high. The 60. Let's see what the expected move. The expected move for next week. Oh, they don't have it yet. They'll have that Monday. So by it reporting earnings on Friday, it's going to do some moving around. So I'll wait on that. Goldman Sachs. I'm also going to wait for a green bar. I got a yellow bar on the weekly chart, which indicates a sell. But I'll wait for a lineup for Goldman Sachs. So I'll be looking at DraftKings on the upside, Goldman Sachs on the downside. And I was looking at BA too. Let me see what these. This is Boeing. They have already reported. They don't report again until August. So it's at 233.91, 242. 242.50. So I'm looking at Boeing, ABNB. Remember I was in that early in the week. You see that I got out of that basically at a $30 loss. So for the week I'm down $148. That's including the JPM trade and what I lost on ABNB. The slight loss on that. So I was in 2 contracts on that. So Boeing, I'll show you what I'm looking at. Boeing is at 233.87. The 242, roughly 10 points, is around my price range. I might go ahead and dip into that. Let's see if I can get in at 113. It moved on me, so I'm gonna have to adjust it. Yeah, it moved. Do this. I'm gonna cancel that. And I'm gonna go to 245. Get in that real quick. Alright, I'm in the Boeing 245 call option. And my reasoning for getting into that as opposed to the others, I mean, it still looks like it might have some more downside, but if it doesn't, I got lineups on all 3 charts. But it seems like it's trying to change, but it did change. But I'm in it, so. Now the other ones I'm going to wait on. DraftKings and the Goldman Sachs. So again, for the week, I'm down $150 something, maybe $60. I'm down. And that's after all 3 of my trades for the week. Shopify. And my list of stocks that I track: When Resorts reports next week, Uber, Square reports on Thursday, Lyft, and like I said, DraftKings. These are the dates here. Beyond Meat reports on Thursday too. So I don't have no signal on that. So Airbnb reports on the 13th. Baba and Baidu, that's later in the month. Right. Oh, I added Coinbase. Coinbase has options on it, so I added that as a proxy for Bitcoin, and it's been pretty quiet. You know what I mean? To give you a look at the options. The volume isn't what I expected it would be. I mean, it's in the hundreds. I was expecting thousands. This is the column for the volume. And volume is the number of contracts traded for that day. So as you can see here, it's not several thousand like other stocks in my list. Like this Riot. Riot also tracks Bitcoin. As you can see, it has a lot more volume. But I'm anticipating the volume to pick up. So they started trading the options this week on it. So I'm looking forward to making trades on Coinbase whenever I get a signal. But to recap, I'm going to be looking at DraftKings, Goldman Sachs, going into next week, and I'm in Boeing. On a buy signal on the upside. I'm betting for it to go up to 345, 245. I mean. And I got in the option at $87. So I just dipped into it. And we'll see what happens. Remember this morning I was supposed to get into Tesla. I didn't do it. I got caught up in something else. And unfortunately I missed. I got this buy signal yesterday. But I anticipated Tesla to trade down a little bit. Let me show you in the 2-hour chart. To trade down before it traded up. So I would be able to get in at a better price. And it did. Within that first hour, or within the first half hour, it went from 677 down to 666. I was looking at the 700 contract, 700 strike. Let me show you what that looks like. As you can see here, this is next week. These are the contracts that expire today. Look at what I missed, y'all. On a $100 risk, I could have been up 852%. So I could have made $1,000 on this trade today. Let me show you what it looks like on the chart. And you could hear it in my voice. I'm pissed at myself that I allowed myself to get caught up in something else other than what I was supposed to be focused on. But hey, it happens. All right, let me see. Where's the option at? Go to this chart. Here's the option right here. Put it on a 2-hour chart. So I was looking at the 700 strike, and it went down to 666. So within that first half hour, when it closed at 10 o'clock, I could have got in at $114. It went as low as $31. And yesterday, I could have just risked $105 and been good with it. But look what it did. By 12 o'clock, it was up at $800. By 2 o'clock, it hit $1,600 with a $100 risk. So I'm not happy about missing that at all. So yeah, that would have made me be up significantly for the week. And remember, I told you I don't understand why I just didn't take the trade, to be honest. I mean, $100 risk, I risked that in at any time. But it did do what I anticipated by trading down. But again, I allowed myself to get caught up in something else, which distracted me from the trade. I totally forgot about it. So that was a missed opportunity. A missed opportunity. We'll be on the next one. Well, I'll be on the next one. You'll see the next one. So I'm gonna go ahead and end this video. You guys continue to send me questions. I will, answer those in these videos, and I will, give deeper explanations based on the questions that you have. So you guys have a great weekend, and we'll pick up Monday. Thanks for listening.